السلام عليكم ورحمة الله وبركاته. الحمد لله رب العالمين والصلاة والسلام على أشرف المرسلين سيدنا محمد وعلى آله وأصحابه أجمعين. I would like to welcome our guests and speakers today, Dr. Ubaidullah and Sister Aziza. We'll start the session by having an introduction. The main objective of the session is to share your experience with our esteemed audience about the implementation of Qard Hassan and how it's impacting people's life at the community level, at the grassroots. I will start by making an introduction of our student guests here. Firstly, I'll start with Dr. Muhammad Ubaidullah. He holds a PhD and an MBA degree with a specialization in finance and numerous certifications in microcredit and microfinance, as well as across the technology space, the digital money, fintech, and blockchain. He's also a frequent speaker at international conferences and workshops on Islamic finance in general and Islamic social finance in particular. He has served several international and national institutions across the world in the field of Islamic economics and finance, notably the Islamic Development Bank as the lead research economist, the Islamic Economics Institute at King Abdulaziz University, the International Islamic University in Malaysia as an associate professor of finance, and also as the chair professorship in Islamic finance at the University Sains Islam Malaysia. And as Brother Efran mentioned, he's the founder also of IBFNet, which is a Islamic business and finance network based out of Malaysia. And it has a flagship initiative based out of Singapore called IBF DigiLabs. He has published widely in the areas of Islamic finance and Islamic social finance. The second speaker is Mrs. Aziza Zainul Abidin, Head of Socioeconomic Development in Waqf Al-Noor Corporation, which is a Waqf institution based in Johor, Malaysia. He has been serving in Waqf Al-Noor since 2016. Prior to that, she has worked in corporate finance and investment at the Malaysian Sovereign Wealth Fund, Khazanah Nasional. She has a master's in electrical and electronic engineering from the University of Nottingham in the UK, and she has a special passion for women and youth empowerment. I would like to welcome you both, our esteemed. Can you hear my voice?
Yep, loud and clear.
So let's start the panel. As we mentioned, the main subject of the panel is to share and educate all of us about the Qard Hassan. We have been hearing a lot about Islamic social finance, and Dr. Ubaidullah, you are actually one of the pioneers that have coined that term back in 2014. Can you educate us on what we mean by Islamic social finance in general, and in particular Qard Hassan, and how is it different from things like zakat and sadaqat and whatnot?
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum, Brother Khalid, my co-panelist sister Aziza, and ladies and gentlemen, brothers and sisters. Thank you for your mashallah. It was pretty lengthy introduction, I must say, and I think you raised a very interesting question, which is very dear to us, all of us who really have been part of this initiative that you just mentioned about, called Islamic Social Finance. It was the first attempt at IRTI, where I currently I work as a lead research economist. We had a team working on this project of documenting the good and bad practices in a sector that somehow was somewhat neglected, I should say, by Islamic economists, and especially in terms of practice. The mainstream Islamic banking and finance, as we understood during those years, I'm talking about 2014, 13 and 14, we still would think in terms of Islamic banking, Islamic insurance, and takaful, or Islamic investments, Islamic capital markets. Uh, and most of the research, most of the discussion in seminars would basically, center around these areas. These were for-profit sectors of the economy. What we felt at IRTI was that a very significant part of the Islamic economy was somewhat neglected, not only by researchers but also by practitioners in terms of industry players. And there was it included not only just the philanthropy-driven or charity-driven sector in the Islamic framework, but also the not-for-profit. There was a huge sector which was working on a not-for-profit basis, which included the Qardul Hasana funds. And there are many, in fact, in Iran alone, in one seminar, we discovered, to our pleasant surprise, there were 6,000 plus Qardul Hasana funds in Iran alone. And they were operating even before the Iranian Revolution. They continued to operate and continued to grow after the revolution. So, and of course, we had these, zakat and awqaf sectors in every part of the globe. In all those societies which were sometime under Islamic rule, we have huge awqaf sectors, a lot of huge properties in this particular sector, and a lot of literature also. A lot of research has gone into it. But then, if you the contemporary research somehow neglected these particular areas. So we thought of bringing them together, and all those areas of Islamic finance, which were either cooperation based or charity based or not-for-profit based, together. And this was we debated for quite some time what would be the right name to call it, because there was zakat, there was awqaf, there was takaful. I'm talking about the not-for-profit takaful, which is cooperation-based and non-profit based. And also, you had this non-profit Qardi Hasana funds and so on and so forth. And the first suggestion was, initially we thought about solidarity finance as a possible way to narrative to capture these particular sectors. And eventually we agreed on Islamic social finance, primarily also because solidarity finance was already, there are a couple of institutions with that title. So social finance was something that was defined those days very clearly, that component of finance which will basically address poverty, address the needs of the poor. So this was a good combination, that all those tools that were not addressed by the mainstream commercial finance as we knew, they were clubbed under Islamic social finance, in which you have not only the philanthropy based, where you have sadaqah, you have qardul, you have zakat, you have sadaqah jariyah or awqaf, but also a huge non-profit sector. We have the modes as we know, qardul hasana, kafala. All these could be the basis of a major component of the Islamic economy.
Thank you, Doctor. And just you have a remarkable story. The first time that I heard it, you are actually the implementation on the ground of how waqf is being used in order to generate certain income, and that income is actually used in order to extend Qard Hasan. Can you share with us the story of Waqf al-Noor and the kind of work that you do when you started and where you are right now?
Sure. Thank you very much, Brother Khalid. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and a very good evening, everyone. First of all, I would like to thank Global Sedekah for this opportunity, for inviting Waqf An-Nur to be part of this great event that is talking about two of our main passion, two of our dedicated subjects, close to our hearts, Waqf as well as Qard Hasan. So who is Waqf An-Nur? So we are a special Nazir in Waqf to the Johor State Islamic Religious Council. And as a Waqf manager, we play two roles, as Mutawalli as well as Mawquf Alayh, to Waqf assets that were endowed by Johor Corporation, State GLC. And on one hand, as Mutawalli, our role is to manage and administer Waqf as to protect and enhance its value. And on the other hand, as the Mawquf Alayh, we diligently distribute the Waqf Manfaat or proceeds to ensure it benefits the Ummah. So in this regard, we have been focusing on socio-economic development, and as mentioned by Brother Khalid, we have been practicing or introducing a program called Dana Niaga, which basically adopts Qard Hasan. So this microcredit program, Dana Niaga, is loosely translated as fund for business, and we launched it back in 2007. So it's been more than 10 years now. And the objectives are first to drive the economy of the Ummah by facilitating the SMEs, and secondly to provide an affordable yet Sharia compliant source of financing. So Dana Niaga is a revolving fund, and we started with a very small initial capital of RM500,000 that were set aside from our Waqf Manfaat. And to optimize its distribution, we focus our target beneficiaries as micro enterprises. So these are those who are earning less than RM300,000 a year. And at the same time, we also focus our target beneficiaries for those who fall under the B40 or lower 40 percentile in Malaysia. So this would simply mean that all asnafs, all single mothers are falling under this category. So our Qard Hasan scheme is basically a tiered financing program. So we start from RM3,000 up to RM7,000 with repayment term of 2 to 3 years. And Alhamdulillah, since 2007, we have distributed RM1.2 million to 494 beneficiaries. So that would mean that the initial capital of RM500,000 has been revolved almost 3 times to RM1.2 million. Alhamdulillah. So now, as for this year, we are truly blessed as our Qard Hasan program has been recognized internationally as we won the Best Islamic Microfinance Institution from the Global Islamic Finance Award last September. And Alhamdulillah, all praises to Allah. This year, Waqf An-Nur is celebrating our 20th anniversary. And to celebrate this journey, we are opening up our doors to other public waqifs and other institutions to donate and waqaf. So this is also something that we hope we can explore together with Global Sedekah, inshallah. So that's our 2-decade story, and we look forward to many more successful years, hopefully with Global Sedekah, inshallah. Thank you.
And Dr. Ubaidullah, you have in your writing and in your teachings, you have stressed on the role of the local institutions, and I think Waqf An-Nur is one example of one of these social enterprises that is embedded in the local community, and it's very close to those people for the purpose of assessment and these kind of things. Can you highlight your thoughts about this concept of localization of the microfinance at the level of the grassroots, instead of looking at it from a bigger or a macro picture?
That's a question for me, the Khalid.
Yes, please.
Okay. I feel that localization is a very, very useful idea when it comes to helping the poor and the needy, and whether through charity or through economic empowerment programs, because of a very simple rule of economics or idea in economics, which is asymmetry of information. Now, if you are doing a centralized microfinance operation, and then there is a high probability that you really don't know what's happening on the ground, and there is a huge information gap, and you are following your traditional best practices and tools of management, the credit management tools, and so on and so forth, based on credit bureau recommendations, and so on and so forth. But the point that really should be stressed is that we are now looking at a different paradigm altogether. Within the Islamic economy, we are also not just looking at the for-profit sector. We are not looking at Murabaha-driven debt or Murabaha-created debt, for high net worth individuals, or people who want to buy cars, or people who want to buy, high-priced goods. We are actually looking at the poorest of the poor, and who are traditionally not been able to get the attention of the traditional bankers, including Islamic mainstream bankers, because the same problems remain even in Islamic banking. If you are driven by profits, then of course, and risk, because you like profits, you like earnings, and you dislike risk. So you try your best to minimize your risk. And one way of minimization is to exclude, the poor and the downtrodden, and because they carry higher risk with themselves. So that's the reason why the poor are not bankable, and that's why they're neglected traditionally. And that was the reason behind the traditional microfinance as we know. But again, traditional microfinance started out with the right mission, with the right objective. But the mission drift is well documented. I don't have to produce a lot of evidence here. It is well documented, well known, and it did go through a mission drift. And high interest rates were an outcome, which were justified on the grounds of high operational cost. Because again, if you try to do things, centrally, of course, you'll have to reach out to the poor. And when you take credit to their doorstep or financial services to their doorstep, and you certainly face a lot of risk, higher amount of risk. So you want a high risk premium. That's point number one. Point number two, the information with you is again not good enough for you to take certain decisions. So that is why you would like to avoid that particular segment. This is the reason why those experiments, which are very close to the grassroots or very close to the local, which use local information. Whether even I would say the Grameen model was a departure from the traditional banking of the poor. It did had its own success because it followed a different model of sort of reaching out to the poor, taking credit to their doorstep, and then finding a novel way of a lending methodology or a lending model of group-based banking, group-based finance, which helped it mitigate its risk. And this Grameen model, I'm talking about the model itself, forget about the interest rate part, but the model, the lending model itself was firmly rooted in the community. And also, this was also replicated by many other experiments where Islamic ones, which try to use the Grameen model, which they will come up with a replication with an Islamic product. One very good early example is the Amana Ikhtiyar Malaysia itself. As we're talking, it started, long ago, almost around 1985, 87. It was a research experiment by a very well-known professor, Dato Qasim, who is basically started this as an experiment, so as a research project. And this project was became so successful that eventually it took a very different shape, and it grew, and eventually it became Amana Ikhtiyar Malaysia as we know today. So it followed the same method. The lending methodology was same. But the point is, when we are talking about localization, that is, it helps in many ways. Whether we are talking about just microfinance or we are talking about zakat or sadaqah distribution, a centralized model is just not suitable for it, because that is the opinion of our classical fuqaha as well. If you ask the classical scholars, they always favor decentralized distribution of zakat.
Excellent. Yeah, and which brings us to Sister Aziza. Since you are already embedded in the community, now, as you mentioned that the income that is generated from the waqf is used in order to create these kind of qard hasan, and your focus on micro entrepreneurs. Micro entrepreneurs is one of the most difficult to deal with, because not from an assessment perspective, but also from the hand holding perspective. And I think this is we would like to hear your experience in not just extending the qard hasan, but actually working with the micro entrepreneur from starting from being a recipient of the qard hasan into something bigger, because at the end of the day, the main purpose of the qard hasan is to enable and to empower at the grassroots level. Can you share with us what is your experience at that level, working with micro entrepreneurs?
Thank you, Brother Khalid. I would like to share a story of one of our beneficiaries named Rohana Arifin, or who I call as Kak Ana. So I met Kak Ana late 2018, and she was applying for our qard hasan. Kak Ana is a single mother. a mother of three, and she ran a little food stall. Back then, she was earning 780 ringgit per month, and that was before expenses. So as usual, we processed the application, and Alhamdulillah, the credit committee gave her the green light. So the next day, we called her up and gave her the good news. But to our surprise, she turned down the offer. Why? She refused to tell us why. So we asked her to come to the office. So at the office, we sat down and we talked about her concerns. Apparently, she has been going back and forth to the hospital and tending to her ill son. And at the same time, at home, for some reason, she's not on talking terms with her daughter. So as she told her stories, I realized that she was holding back her tears. I knew then that she was at the verge of giving up her business just so that she could save her family. At the end of the conversation, I walked her to the door and I whispered to her. I held her hands and I said, Kak Ana, don't forget your solat. Do not forget your solat. So she nodded and walked away. A few days later, Kak Ana gave us a call and she gave us the decision that we wanted to hear. Alhamdulillah, her decision to take up the loan has opened up many more opportunities for her. Just after she received the 3,000 ringgit loan, she was offered a brand new stall in Lakin Central with a rental rate just 400 ringgit, a big discount from the market rate of 1,000 ringgit. And on top of that, she was also selected as one of our 10 participants in the coaching and mentoring program. So the Quad Hassan, the brand new premise, as well as the coaching has helped to boost her income. So from an initial income of 780 ringgit, now she could earn up to 16,000 ringgit. And that is almost 20 times increment. So the Qad Hassan did not just help her turn around the business, but also save her family. Her son has gotten better, and we could see her daughter is helping out in her stall. So that's a good sign. Next, she told us that she is planning to pay her zakat when her income achieves the haul and as well as the nisab. So that was the story of Kak Ana. And this is
MashaAllah.
just one story. We hope that there'll be many more stories just like Kak Ana in the future as we foresee increment in number of asnafs due to COVID-19. But at the same time, depleting pool of zakat fund. So we hope that the next Kak Ana will be supported by many more contributors, hopefully from the ones that are viewing us today, inshallah.
And this is remarkable. And to put it in context, you mentioned that her income was below 800 ringgit per month, which
Correct.
placed her in the bottom 40. And having earned from a business perspective more than 16,000, she's already in the top 20 or the T20 according to the classification of Malaysia. So this is a story of bringing somebody from below Habb al-Kifaya or being sort of like eligible to take zakah, somebody like this, and empowering them through the journey to become a zakat payer. And this is truly, changing lives at the grassroots levels. I think these kind of stories are very, inspiring. And back to you, Dr. Ubaidullah, how, usually those people that are very close to the grassroots are missed by those that are looking at stuff from a corporate perspective or maybe from a government perspective. How from your engagement at different educational institutions and dealing with large organizations, how can companies like, for example, like Wan Corp or Global Sadaqah facilitate that that trust and create that network between the corporate side, be it part of their social responsibility, or even from a government perspective in terms of mobilizing funds from surplus countries to other deficit countries. What is your views on that?
I'd like to narrate from my own experience. One of my visits to Bangladesh, where which happens to be one very good example of how CSR funds were used to create and not an institution, but a very a winning project out of that. This project was undertaken by a very well-known player in the Islamic banking, the Islamic Bank Bangladesh. So when we were trying to document something on Islamic microfinance, we were advised to visit this particular organization and take a first-hand look at how they do Islamic microfinance. So, and we were pleasantly surprised to learn that the whole funding for the project was in the form of CSR funds. And they were basically replicating the Grameen model, but with an Islamic product. The product was by Muajel, which is again they hired a lot of people from Grameen and changed the contract and followed the same method of village centers, and of course doing the necessary changes wherever it was required, not just in the contract but also in the different expectations from the stakeholders, from the beneficiaries. So it was done in a very similar way, and what we realized, the project overheads, almost all the overheads, actually they were absorbed by the mother bank. So in a way, the CSR funds they were used to absorb the overheads, and as a result of that, this particular project was able to extend similar kind of financing with very similar terms, but at half the cost. In fact, it was less than half the cost of Grameen. They were using entirely the same method of reaching out to the poor, having the village centers, and the cost elements were absolutely, you can see a one-to-one mapping that it is just a replica of the Grameen model. But whereas Grameen was charging, let's say, 40% plus as the cost of funds, rate of interest, here the by marginal rate was somewhat around at those days 12.5%, and there was also further rebate on that. So this could happen because CSR funds were absorbing part of the administrative costs. Grameen was a full cost recovery model. So they were trying to recover every element of the cost they were incurring on a profit, because it was they had to recover the cost. There was no waqf funds, or there was no cash waqf, or there was no other kinds of Islamic charity funds. So they had to recover the cost. And when they try to sort of pass on the cost to the ultimate beneficiary, the price has to go up. But here was another institution. It used to be called Rural Development Scheme. And we had a very thorough analysis of that. In fact, we realized that though they were charging about, let's say, 12.5% nominal rate, effectively, they were just recovering the unabsorbed cost. And this is something that is even permitted in Qard al-Hasana. In fact, this is one of our observations was that then why are you using, let's say, a BMOJ, which is a for-profit contract, and that changes the equation completely. If you're not going to make profits, why not use Qard al-Hasana officially, and get all the costs that are bound to be there, absorb that through CSR funds, which you are doing in any case. So effectively, they were doing the same thing, but they're using the for-profit contract for that, which was not necessary in the first place. There is a huge difference between a BMOJ contract and a Qard al-Hasana contract, especially in the context of microfinance and helping the poor. Because for the simple reason that if we're doing a BMOJ, it has to be tied with a specific asset. For example, I want to buy a cow. I get the funding only for the cow. I cannot use part of the funds for anything other than the cow. If I'm buying poultry, for example, I'm getting a BMOJ financing for that. Then I can only use the funding for buying poultry. So that created a huge problem, a rigidity problem for the user, because it is also an established market wisdom in microfinance that you have to follow a financial services approach. If you some of us might be knowing the early experiments in conventional microfinance as well, where our development institutions would be using a sort of micro enterprise based approach, which means you create a micro enterprise and we fund it. So we basically fund the asset, and that is that goes well with, let's say, module or all the installment sale and this kind of financings. But the later, wisdom, market wisdom that was all the best practices that were documented, or the research that was undertaken, it very clearly pointed out that you are not really addressing the needs of the poor. If you're, let's say, financing a cow, when the farmer needs, money for the marriage of his daughter, then he's going to sell the cow and use the proceeds to finance, to cover the marriage expenses of his daughter. You cannot stop him from doing that. So at the end of the day, you should take note of the fact that every human being, poor or rich, they have different types of needs. They just don't create a micro enterprise. They have needs which cannot be tied with specific assets, like a two-wheeler or a three-wheeler or a cow or any other livestock. It cannot be tied with that. You have to have that flexibility. They need certain expenses which can never be financed using a murabaha or a BAM margin. It's not possible.
Right.
So therefore, Qarda Hasana is the best way out here, which means you give total flexibility to the poor. He or she decides how he or she is going to use the funds, whether to buy a cow and be economically empower themselves, or whether to meet the education expenses of their children or the healthcare related expenses. It is for them to decide. And that has also come out again and again in different studies, very recent ones on poverty alleviation, where when you make a cash transfer to a poor, a recent studies done by MIT, and I have quoted that in some of my blogs. It's very beautiful evidence has come out of that. They have found, the researchers, that if you are making an unconditional cash transfer, don't tie with conditions that only if you send your children to the school you will get this money, or only if you do this you will get this money. Leave it to the poor. Leave it to for them to decide how they are going to use the funds, and they can be very wise in using the funds. So you don't have to proceed with a sweeping assumption that the poor is going to waste all these resources and squander it away, and they cannot use it to the best possible manner. That has been very strongly refuted by recent evidence. So again, Qarda Hasana gives you that flexibility, that give the whatever amount he needs, give it as a no strings attached. Don't put conditions that you have to buy a tuk-tuk and you have to start earning, and only then we will give you the financing. No.
Thank you.
That makes it a very different game altogether. Yeah.
And on your experience, Sister Aziza, and I know that I'm a bit conscious of the time, two things that I would like to get your thoughts on the points that was mentioned by Dr. Ubaidullah in terms of the unconditional or the Qard Hasan when it is given to the micro entrepreneur, your experience in that. And the second thing is, since you're now going to be moving from just relying on the waqf income and opening up to other waqfs, that might want to contribute to your social mission, how are you going to utilize the technology on that? So there are two parts. First one is your experience in unconditional Qard Hasan, and the second one is your thoughts about using the technology to interact between the donors and the impact that you're making at the grassroots level.
Thank you, Brother Khalid. I think due to time constraint, I'll try to summarize the first part by focusing on what we need to provide to our donors, to our waqif, which is basically the impact. So taking note that the Qard Hasan should not be having strings attached, but at the same time we want to have an impact on the Qard Hasan. So I will summarize it as Q, A, R, and D. So Q for quality, we look for quality recipients, those who have so whenever we get any application, we'll go to the ground and make sure that they give the right stories and we verify their stories. And then our credit approval committee will also look through the application and ensure that only eligible applicants are given the green light. So next, A for awareness during AQAD. So once we greenlit the application, we ensure that applicants are aware that what they are receiving is not a donation or zakat, but actually a waqaf, a Qard Hasan, something that they need to repay. and we educate them that this is a loan through our ACAD program, whereby they will, apart from signing the agreement, they will have to verbalize their commitment to repay the loan, to ensure that many more people benefit from the loan. And next, R for reporting. So we have the responsibility to report on the loan performance to our committee as well as our wakif. So how many people are paying on track, how many aging and whatnot. So when we kick off the collaboration with Global Sedekah, we hope that this is something that we will continue in the future, inshallah. And finally, D for development. So on top of the Qard Hassan loan, we make an extra effort to ensure that each dollar lent is going for a long mile. So this is through our commitment through entrepreneur development programs. In the past, we've carried out coaching, mentoring, digitalization, marketing, and so on and so forth. So these are to ensure that the lenders carefully use their loan and grow their business efficiently. So that's how we try to manage between the characteristic of Qard Hassan, but at the same time ensuring that there's an impact from the loan. So as for your question with regards to technology, I think in the past we have done a fundraising program through a public offering of Wakaf shares through Wakaf Saham Lakin Central. And based on our experience, the fact that we use technology to amplify our reach to the high net worth individuals help us to first build trust and transparency. So, for example, we use Maybank to You, an online banking platform that's well trusted and used throughout the nation. And the Maybank to You created a special function for us so that wakifs or subscribers can subscribe through the platform. So that's our experience using technology to raise funding, and I think a reputable platform like Global Sedekah is also providing the same level of comfort and trust to its donors, inshallah.
Jazakallah khair. Remarkable stories. Jazakallah khair, Dr. Ubaidullah. Jazakallah khair, Sister Aziza. I think it's on behalf of the Global Sadaqah team and the audience, we thank you for your insight and a lot of food for thought. Jazakumullah khair. Back to you, brother.
Thank you very much, Brother Khalid. Thank you so much.